Hi everybody, this is Jennifer Schaus coming to you live today from Washington, DC, and thanks for joining us in our monthly GovCon Q&A Cafe. These webinars are the second Friday of each month. They typically last about an hour and a half, and we've got some great content, and Q&A will be at the end of the webinar today from 4 great experts that we have on our panel. To get to the recording, it's just the same registration link that you used to sign up for the webinar. If you're looking for today's PowerPoint, it should already be up on slideshare.net. And just to let you know what we have remaining for the rest of the year, again, these are a monthly series. It's the second Friday, so September we're covering oral presentations, October set-asides, November pricing, and then December M&A. The speakers that we have for next month in September on the 10th are Rena, Deborah, Troy, and Andres. Set-asides, we've got Anna Ehrman, Cy, Tim, and Eric. Probably these are all names that if anyone's in government contracting, you probably recognize the names or the faces at least. We dig into pricing in November with Marcia, Michael, Tracy, and Jeff. And then mergers and acquisitions in December with Shirley, Josh, Kate, and Brad. Okay, we also are putting on a webinar, unfortunately not doing this one in person, but it's the fiscal new year best practices that'll be on October 1st, which is a Friday. And we've got 5 different sessions, opening remarks from SBA, who confirmed with us yesterday, and closing remarks from GSA. But we're going to cover some other topics here on October 1st, so please join us. A little bit about us. We do provide professional services for government contractors, including market analysis reports, proposal writing, pricing, compliance, back office administration, marketing, and GSA schedule. Now to thank some of our sponsors, the Virginia PTAC, which is the Procurement Technical Assistance Center. There's one PTAC at least in every state, and they're usually co-located with a university. The Virginia PTAC is, I believe, probably one of the largest in the country, if not the largest. They provide matchmaking, counseling, events. I'm not sure if they're back to in-person events yet or not, but if you jump on their calendar, they've got a great list of services that they provide, and as I mentioned, counseling, matchmaking, and all the rest. We also want to thank Crown Castle, an IT provider to both the government and government contractors. They've been a sponsor of this series since January, so for the full year. If you have any questions or want to reach anyone at Crown Castle, your point of contact there is Peter O'Brien, and his contact information is there on the bottom right-hand corner. Our other sponsor today is SwigTech. They are a company out of, I want to say it's either Minnesota or I think it's Minnesota. They're IT experts in providing CMMC services and other cybersecurity services to both government and government contractors. You've got some contact information there for Eric Clark, his email and his phone number. Okay, so today's topic is compliance, and we want to thank our speakers who took time today to put together some great content. They're going to answer your questions. We've got Ryan Bradle from Ward Berry. He has spoken in many of our webinars in the past, so thanks, Ryan, for joining us today.
Thanks for having me.
Thank you. We also got Jacob Barclay, who's a new father. Congratulations to Jacob. He has also spoken for us in the past in some of our webinars.
Thank you.
Mark Snyderman has joined us as well, who also has spoken in many of our webinars. And Rebecca Stewart from Insperity is here as well, a longtime friend and colleague who is soon to be an empty nester, unfortunately. So, okay, let's move on to compliance. And Ryan, I believe you're up first, so just let me know when you're ready for your next slide.
Okay. Thank you very much, Jennifer. Happy to be here. So don't have a lot of time, so we'll jump right in. The first slide, the first topic we're going to talk about is kind of an overview of what you need to do, what you need to be thinking about to make sure that your company is compliant. As everyone knows, there are a number of rules and regulations for government contractors. It's known as a heavily regulated industry. And so before we get into the details of various compliance risks, I just want to talk about at a high level culturally what it takes to be a compliant company. The first point is just identify the special risks in your industry. Every industry has different risks. If you're in the manufacturing industry, you got to be worried about your supply chain. You got to be worried about where your parts are coming from, complying with the Buy American Act and related trade controls. If you're in the IT industry, obviously cybersecurity is a big risk. So just the first point is just to engage with fellow members of your industry and understand what your industry is like and what's especially risky for you. The second point is, and this is something I've been preaching for a long time, is if everybody's responsible, then nobody's responsible. And so you want to have one person in your company who is the compliance person, and it's their part of their job description to be worried about the company's compliance and be checking up on it. Now, of course, small companies, probably not going to be a full-time job for a small company. It's just going to be one part of somebody's portfolio, but you do need to have one person. The next point, though, is, well, if that person is the watcher, who's going to watch the watcher? And that's why we highly encourage having an independent entity such as an advisory board or a law firm assist with compliance. So, it's checks and balances. You have the one person at the company who that is their job to worry about compliance, but that person needs to have oversight, and that oversight should come from an outside entity. The fourth point is to create written and published ethics and compliance policies. Two reasons for this. One is nobody within the company or external to the company, nobody can say, hey, we were ignorant, we didn't know what was going on. If you have written policies and they're published on your website, that's going to keep everybody on the same page with what you're doing. Also has a very important business development and marketing function. I know a lot of large primes who one of the things they look at when they're thinking about partnering with a small subcontractor, they look at, hey, how mature is this company's ethics and compliance program? Are they going to be somebody that we want to work with? And one of the ways that you can show that is by having your compliance policies be published on your website is the best place, but other ways to do it too. Next point, make sure every employee knows how to report a problem. Some companies, larger companies, will use hotlines. That might not be feasible for a smaller business, but if you're not going to do a hotline, at least make sure that everybody knows who that one person is within your company, and they know how to report, whether it's email, phone. People want to make sure that that their reports are going to be kept confidential, so you have to give them that assurance. And so make sure you have a special email address for reporting compliance problems that everybody feels safe reporting. Next point is engage in regular training. That's the sort of the sine qua non of a compliance program is, if you just have something on your website, you have an email address that people can report to, they're going to forget about that tomorrow. So if you're not doing regular training, you really don't have a compliance program. Doesn't have to be overbearing, again, especially small companies, doesn't have to be expensive, but if you're not doing a semi-annual training with your employees on compliance, you're going to want to run into problems. Same point with regard to audits. This is where you probably want to bring in your outside firm or advisors to kind of step in on an annual basis and check in how you're doing on compliance. One of the themes that you're going to hear from all the speakers is that oftentimes when it comes to compliance, you may be non-compliant and not even know it. That's most people that we're talking to, they don't have a situation where there was intentional wrongdoing, rather a situation where something was going wrong and they just didn't know it. So it's important to engage in regular audits. And just the last point, kind of to sum it all up, is create a culture of compliance. It matters how you talk amongst yourselves in meetings. And if everybody knows that, hey, we're a company that takes compliance seriously, they're going to be much less likely to be tempted to engage in wrongdoing. So next slide. And I'm just going to cover two quick potential compliance topics that we often see in our world, in the law firm world. These are the things that clients are often calling us about. The first is the Procurement Integrity Act, and then the next, which we'll talk about, is EO, or Executive Order 11246, which has to do with equal opportunity employment. Really quick on the Procurement Integrity Act, don't want to take up too much time and get into all the legal nuances, but the most important point that I want to make here on the Procurement Integrity Act is one of the elements of the Procurement Integrity Act is do not obtain competitor pricing information or source selection information before the due date for proposals. Key element of the Procurement Integrity Act. It is a violation of the Procurement Integrity Act for a contractor to obtain a competitor pricing information. Now, what do I mean when I say obtain? That doesn't mean that you have to be going after it or seeking it out. There are plenty of cases where contractors have unwittingly obtained competitor pricing information and they got in trouble under the Procurement Integrity Act. Really all the mens rea, that's a fancy legal term, but it just basically means like, what's your level of intent? What were you trying to do? The mens rea for the Procurement Integrity Act is knowing. So if you know that you have a competitor's pricing information, even if you didn't try to get it, even if it was inadvertently sent to you, if you know that you have a competitor's pricing information, you are potentially in violation of the Procurement Integrity Act. So something very important to be aware of, to keep in mind, if you inadvertently obtain a competitor's pricing information, call your legal advisor and figure out what to do about that. The next 2 points in the Procurement Integrity Act just have to do with relationships with government officials. The first is the Procurement Integrity Act says that you cannot hire a former government official who was a contracting or procurement official during the time that you have a proposal before the government that person may have been involved with, as a procurement official. But it's very nuanced. It's a little bit complicated when that might trigger. And so my advice here is anytime that you are thinking about hiring a former government official, any former government employee, strongly suggest that you call your legal advisor and make sure that all the boxes are checked to make that okay. Of course, government officials can be very valuable assets to your company. They can be great employees. And I encourage you to hire them, but just make sure you have a quick conversation with your legal advisor before you do that. Next slide, please. And just the last point that I'm going to cover is EO 11246, equal opportunity employment. This is a pretty complicated law. There's a lot that goes into it, and it starts to ramp up the bigger you get. So the larger companies have a lot more that they have to do to comply with EO 11246. Smaller companies, a little bit lighter compliance obligations. The basic ones are here. The one that I want to focus on is the first one, which is don't discriminate. That's obvious. I'm sure nobody here intentionally discriminates. You can discriminate without even knowing it. And let me give you an example. If you have a job requirement and let's say you're posting a job for an office assistant, right? Low-level office assistant, and you say, well, we want this person to have an MBA, Master's of Business Administration. If in your area there are lower rates of, if ethnic minorities do not have Masters of Business Administration at the same rates as ethnic majorities, that can potentially be discrimination unless you can state a very particular business need to have the requirement for Masters of Business Administration. Now, so of course, if you're hiring a CFO, of course you want that person to have an MBA. But if you're hiring a low-level office assistant and you can't articulate why that person needs an MBA, that is potential discrimination. So again, a lot of gray area, very nuanced, but it is something that folks should be aware of, that they might be in violation of EO 11246 without knowing it. And that's why it's important to have good legal counsel and good HR counsel. I know that Rebecca is going to be really diving deep into HR in her section, but just wanted to illustrate why it's important to have outside advisors who can help you be compliant. So that's it for me.
Hi, I'm Rebecca, and I have brought with me my HR specialist that handles a lot of my clients in the GovCon space and their HR issues. So we have identified 5 that we want to bring to your attention, and we're going to dive into 2 pretty heavily in a limited amount of time. So the top 5 issues that we're seeing today from our client base is mandatory paid time off requirements. Department of Labor versus contract labor is a big one, and we're actually going to talk a little bit more on the next slide on this one. Work site, quote unquote, in the hybrid work model and how that impacts compliance, meeting certification requirements, and then of course diversity, equity, and inclusion issues. So first, let's start with just real quick, Kristen, if you could tell us just a little bit about, because I get a lot of calls about this paid time off requirements and the obstacle around state, local, federal contracts, all having their own opinion on this. How are you working this, and what is your recommendation to our audience?
So it is a complex thing. Currently at last count, and I think there's been even another one added since I put together some information for this. There's 31 states and counties that all have separate mandatory leave requirements. So you need to make sure when you are looking at your contract and if there are prescribed vacation needs and sick leave in there, whether or not it's going to meet the requirements of where you are going to be operating. A lot of times you're just going to have to budget more leave time than your contract is going to allow. Now, those of you that might be venturing into the SCA world, the prescribed 56 hours that are getting there is pretty good to cover a lot of the requirements, but there's still issues with the carryover amounts and what have you. So you definitely want to check that and just be prepared where you're going to be producing the work and what locales require that. It also will make a difference between front loading and doing accruals, and whether your contract, depending on how you've written it, is going to cover that. Is if you have an employee that was front loaded, say 56 hours of sick leave, are you going to be able to cover that and recoup that during the rest of your contract?
Right, and we're going to get back to Department of Labor versus contract labor, but let's talk a little bit about worksite, because you mentioned when you were speaking, just it even impacts time off requirements. Can you talk to us a little bit about how we're defining worksite nowadays?
Well, nowadays with the COVID and everybody working remote, and so many of the government contracts are allowing the remote environment, you need to take into consideration that it is where the work is done, it's performed. You may have a contract that's based in DC, but you've got a remote worker in Minnesota, let's say. The Minnesota rules and regulations are going to be what is required. The Minnesota workers' comp is going to be required. The workers, if they have a mandatory family leave, for example. So you need to take a look at that. And throughout all of the COVID remote work and the hybrid works and what have you, the magic number has kind of been 6 months. We sort of looked at 6 months being that temporary period. If it's going any longer than that, it then becomes a permanent thing. So even if you had somebody in your office, say in DC, and they switch, you need to take a look at the rules and regulations in that state. Another thing to be aware of, it may drive your workers' comp costs, it may drive some other costs as you're preparing your contracts.
Thank you. And we're going to skip now really quick to meeting certification requirements. It is one of our top 5 issues. So briefly, can you give us a little bit of insight on what we need to be aware of?
Right, and I do have a lot of my government contractors are in the IT world. So the CMMI and the CMMC, as Ryan pointed out too, with the cybersecurity is really running a lot of this. But a lot of the certifications that are coming out, you need to, you have a struggle to support the fact that you're being appraised and to give those roadmaps to the people that are looking at your operations for that first level and second level of the certifications. You're going to be looking at all sorts of things. You're looking at your recruitment processes, your hiring and orientation, your engagement in the culture. So you need to have those set and repeatable processes and measure against them. So that, for a smaller company can be a lot of work that you just don't know who's going to do it and where those key indicators are going to be coming from.
Okay, thank you. And Jennifer, can you tab us forward? So let's talk about, this one's come up a lot this last year with my clients, Department of Labor versus contract labor categories, and specifically when they don't gel, when our contracting officers have a different opinion. Can you please talk about this?
Right. So we see, and a lot of times, again, this comes up more often if you have a contract that is subject to a wage determination. But even so, you may have a contract that says this position is definitely exempt. We're not paying overtime for it. You need to work with your HR people or your legal representatives to make sure that's actually the case. Your contract people are not going to want to pay overtime. They are going to want, 50 hours a week and not pay for it. But you are still on the hook if you are not complying with the FLSA regulations to pay overtime if the position is an overtime position. So you definitely need to make sure of that. I would push back as much as you're able to on the contract to have some reconciliation. If you have an SCA contract, there's a whole dictionary of occupational titles that you can match to. And those will help you say, look, this position is the same as this one. You need to take a look at this. And this is really a non-exempt position. They need to be paid overtime. So you may not win that conversation with your contract, but if you don't, you still need to pay those people overtime. Another area to think about budgeting for if you cannot win that argument.
So if the bottom line is that if the DOL might disagree.
DOL does disagree. I've had cases, and I hate to say it, where we've had the DOL come in and say, that's not working right. And you don't want those penalties when, you're trying to grow your business.
Okay, thank you. Jennifer, can you advance us? Thank you. And our last slide.
Right, and
so we have a beautiful picture coming from our HR analytics. We have a whole suite of HR analytics, but talk to us about how that plays into DE&I initiatives and what does that have to do with your contract?
Okay, so at the very basic, if you are over that, and Ryan showed a little bit of this on his slides, you have an EEO report that needs to go in. You have affirmative action requirements if you have a contract that has over 50 people on it. And so having the ability to ping your systems and see where you are with that is very key, because there are those benchmarking if you're going after certain contracts. You need to have the VRVRA benchmark at 5.6%. You need to have your Section 503 of your disabled employees at another 7%. So you need to have the ability to pull that. Now, we're very lucky to have the system that gives you, here's where your employees are, and here's a benchmark that we have with EEO. So it's a great place to start. For the most part, you are going year over year, going to be working with your own numbers to improve those. But your goal is always to get up to that benchmarking data. So it's really good to have that. And I think Ryan alluded to this too, in recruiting and hiring. You need to be aware of where those biases are. And a lot of the focus, I think, on DEI initiatives is that awareness. Where are your own personal biases? Are you advertising in a place that unnecessarily eliminates part of the crew? Are you taking advantage of your state employment offices? That right there does a good level setting for you. So as you're working through those initiatives, you should, if things are working hopefully properly, you're going to see improvements in your numbers. You're going to be able to pull that, and you're going to be able to prove also on your AAPs and see better reports to the EEO year after year. So it's an important thing, not only for your government requirements, but it's important for the way your business runs. it's good business to have diversity in your employees.
Would you recommend that not to wait until you've already hit 50 employees and
Yes.
reports are done? I mean, if we're at 40 employees and we
Yeah.
notice a significant gap and we're not going to probably hit it at 50, corrective action can start before it's
Absolutely.
mandated.
Yeah, so it's a good thing just to be aware. You know, when you're small and starting, you tend to hire people that are like yourselves, and that's great in the terms of, you know, what you're going, but you need to bring that diversity in. It's good to have the diversity of thought, and it'll meet your goals down the line so that you're not playing catch up at the last minute.
Corrective action.
Yes.
I think that we are done, Jennifer.
Great. Thank you, Rebecca. And Jacob, over to you for your piece.
No, that was good information. I appreciate it, Rebecca, and both Ryan as well. I know Ryan alluded to one of the clauses for the procurement compliance, right? If you'll see solicitations where they actually disclose either some proprietary information. So I've seen some recent court cases on that, and that's oftentimes where you wouldn't see that, right? The integrity of a procurement. So just be mindful of that. Oftentimes you would say, oh, wow, there was a hidden Excel tab. And so you have to be mindful that you can't just take that insider knowledge and just run and gun with it. So be mindful to reach out to the legal professionals to kind of look into that insight. So our topic today is really all things compliance, and really I specialize in all things DCAA, DCMA. So this is right up my avenue for really aligning these 6 business systems. So as we walk through all 6 business systems, you have to be mindful of a couple different things. Is that right now I'm looking through a lens of, hey, you're doing DoD work. And so definitely be mindful that all of these, I think 5 of the 6 business systems actually just have a FAR clause, meaning each system has separate requirements, albeit the FAR or the DFARS, if you're applicable. And so you'll see varying levels of either oversights, right? So if you're a DoD contractor, you're going to be working with DCMA and DCAA. However, you could have another alternative cognizant federal auditor if you're doing work with NASA, for example. That's the easiest one in my backyard. So there are 6 business systems, and I want everyone just to be mindful is which of these systems are really applicable. So this is $1 million question. Let's use the current, I don't know what amendment number we're on, but the big National Institute of Health, right? CIOSP4. We've all heard about it. It's $50 billion IT contract that keeps getting amended. And you'll see in that solicitation, again, that's not a DoD contract. So what are the FAR requirements for a estimating system or an approved accounting system? If you review that solicitation, you'll see that accounting system is a go or no-go criteria. I think it's the only go or no-go criteria. So you need to have that accounting system to even propose and get through the gate. Now, they award you points if you have other systems that are applicable. And that's where it turns into the Wild Wild West, right? Is the way I like to call it. Because if you're a small business, do you really need an estimating system? Well, the answer there is not likely. It's almost no. And if you're a DoD small business, you're exempt from that requirement. And so you can walk through each system, and really the FAR defines it or DCA's guidance defines it. So like a contractor purchasing system, right? CPSR. The FAR, if you hop into 252, the DFARS, it doesn't dictate a monetary threshold. However, you can go to DCMA's, guidance, and they have a guidebook where it states $50 million. So that's the threshold. So it's not applicable at all times. However, you'll see solicitations that give you points in their evaluation process that if you had the system in place. And so that's where a lot of small businesses land. So the applicability to small business, I could walk through all of them at a high level. And if we did kind of look through and say, okay, if you're talking about an accounting system, that really isn't dependent upon whether or not you're small or large. It's really your contract type. And then do you have a cost reimbursable contract if you're doing non-DoD work? And then certainly if you're doing DoD work, it could be a cost plus contract. It could be an incentive contract based on cost information. It could be a T&M contract, which is a type of cost reimbursable contract. Labor hour contracts or progress payment type contracts are also, if they're based on a percentage of completion, then yeah, you would need that approved accounting system. An estimating system is again, I've been talking, at length about this, is because that CIOSP4 solicitation that's out on the streets right now, they're going to give you points if you have an estimating system. If you're a non-DoD contract entity and you read just the FAR Part 15, there is no real threshold on it. It's really at the CO's discretion on whether or not it's applicable. Now, if you hop into the DFARS side for DoD work, you'll see that it's at $50 million. And yeah, there's a little caveat there. If you're greater than $10 million of certified cost pricing data, then it is applicable there too. But you have to have a request from your ACO to actually put that into play. So key number there is 50 million. And then the CPSR, right? So the CPSR guidelines are at $25 million of competitively, cost plus type work. And that $25 million threshold actually excludes competitively awarded firm fixed price or firm fixed price with economic adjustments or commercial items. So just a couple high level out of those three systems are really the prominent ones that I see. And really out of the applicability for small businesses, I would actually argue that the two that you're going to see most frequently is the accounting system and then a property management system. The key with all of these systems is really documentation. So albeit if you are going after CIOSP4 and you want your estimating system, how do you put that into place? Well, you really can't call it DCAA. There is no 1-800 Ghostbusters DCAA, come audit me. If you're a small business, it's going to be hard to even get on their radar. And at the end of the day, they are actually in the business of saving taxpayer dollars, right? Their mission isn't just to run around and kind of fulfill requests. So it's going to be hard to get you there. That's where people use outside consultants in CPA firms to make that determination that your system's adequate. Go ahead, Jennifer, to the next slide, please. So this is a great compliance, like hot topic slide where the table to the right, so a lot of people don't know this, but DCAA actually reports to Congress, right? It's part of the NDAA, and so what they're actually doing in this report for FY20, financial or fiscal year 2020, they're reporting to Congress basically how much do we audit and what was our total tax savings examined or exception audited cost. And so here, when I'm aligning to that red box, it's just symbolizing, hey, this is an element of DCAA's function. You can see basically the number of reports that they produced over the past year and systems, cost accounting standards, truth and negotiations, TINA, or I think it's TICPA now, if you want to use the acronym. But just be mindful that this is one of the key systems that, again, there are 6 systems, 3 and 3. You have 3 that are performed by DCAA. You have 3 that are reviewed by DCMA. And of the hot topics that we're seeing right now, I have them listed here and I'll talk through each one briefly, but really working from home. So this has brought your policies and procedures to a new level, right? DCAA does love to come on site and they've been doing everything remotely, the vast majority of their audits. And ultimately they still are performing virtual form checks, meaning if you have someone in Butte, Montana, they are going to set up a Skype call and walk through a virtual time check with that employee's timesheet to make sure it's adequate. It's really, the next bullet is policies and procedures. On an annual basis, I think when we're talking about compliance, is making sure that everything is up to date, documenting that there haven't been significant accounting changes or system changes or just policy changes where you now have 80% of your workforce or 100% due to COVID working remotely, right? How are you handling the controls and oversight and segregation of duties? That's a big item. We still see DCA finding and auditing on unallowable expenses, right? This is a big compliance thing that I think accountants and contract professionals really should go through some fashion of unallowable expense training on an annual basis, right? It's just like, I know the attorneys would say an ethics training would be great on an annual basis. And so this is kind of a slam dunk. There are hot topics within unallowable. So executive compensation is one of the hot topics that we're still seeing them scrutinize when they get into your ICSs. Indirect rate structuring has been a big change. This isn't really a compliance element. It's just people are changing how they do business due to COVID. They simply, to recover your costs, why would you not develop a separate division and have a 100% remote workforce? And you're not going to be burdening that with necessarily your overhead or G&A expenses. And from a price competitive standpoint, that's very lucrative, right? How do you get your price that low? Well, you're hiring people from Butte, Montana to perform work remotely that's actually being delivered in New York, for example, just hypothetical. The last bullet is bonuses, related party rent, limitations on subcontractor costs. I saw that revised final rule actually just got published, and now the FAR actually matches what the SBA dictates, which is a great synergy between two regulations. But overarching DCA, these are some of their hot topics that if you haven't considered as a small business, make sure you're dotting your I's, crossing your T's. Next slide, Jennifer. So this last really slide that I have is really speaking about your accounting system, right? This is the elephant in the room if you are a small business. So if you are Leidos, DRS, or someone huge out there right now, I know you already have an approved accounting system. And so if you're a small business, this is one of the things that you need to be mindful of. This is really a chicken before the egg scenario, because you can't propose and actually win a solicitation without proof of an adequate accounting system. And again, I alluded earlier that you can't call 1-800-DCAA to come out and give you an audit on your accounting system, because you don't currently have a cost plus contract. You don't have something where they would actually get lucrative benefit by assessing your system. And so the compliance requirement I defined here in FAR Part 16, and just as I alluded to, the CIOSP4 opportunity that's on the street, this is a go or no go criteria. So I recommend, if you're a small business and you're not doing cost plus work, or if you're a subcontractor and you haven't primed something that's cost plus, or even working as a cost plus subcontractor, to really go familiarize yourself with the standard form 1408. It's really the pre-award adequacy checklist. Walking through it, it's very boilerplate standard language. It's not like reading the FAR. You can actually get through it without falling asleep. And ultimately, it's gonna help you form how do you need to be structured from an accounting perspective. I think this is very lucrative. And my last bullet is really, if you use just like the industry standard, a lot of businesses starting out, they're on QuickBooks. And so can you make QuickBooks? I always joke when I work with DCA auditors, I can make the wall behind me an approved accounting system. Because really, as long as you can have the right level of internal controls and the right documentation, the right procedures, you really can do anything. There is no slam dunk. You don't need to run and just go buy Deltek to have an adequate accounting system. So it's all with documentation, policies, and procedures, and then having the tools and resources to develop the controls. So I really encourage folks, if this isn't something you've gotten to, but as you're a small business, you're probably going to see opportunities that are requiring it, like CIOSP4, where it's a go or no go criteria. And when a solicitation drops, can you go get ISO certified a estimating system and an accounting system in that initial window? I would argue that's a lot to get done, and you probably can't do it in a 30-day window. Now, luckily on CIOSP4, it has been amended once again. So, hey, there has been enough time. So there's that going for you. And with that, I think that wraps up my portion.
Great, thanks, Jacob. And Mark, I think you're the cleanup hitter here, and I will advance over to your slide.
I am, thank you. So this is the one thing that's been pretty impressive is, and I'm sure for the listeners, is the breadth of topics that we've covered in this last 15 or 20 minutes is pretty staggering. I mean, we've gone everywhere from, you know, equal employment opportunity to SCA to full-on DCA rules, DCMA, and it all kind of wraps itself up. And you know, so and Jacob was talking a lot about this business systems rule and the different systems, which you know I've identified here as well as he has. And how does it all work for you as a contractor? What do you need to do? And one of the things that the business systems rule has in it, and you have to look for this to see if it's in the solicitation and if it's flowed down, is, you know, the FAR clause that actually says that CAS contractors should have all these systems in place, and you're supposed to get your DCA, DCMA reviews. And the biggest problem is that if you have material deficiencies, it can result in payment withholding by the contracting officer. It's a pretty big deal. So you got to think about, like, what are the ramifications of not having these systems in place, and making sure that the rules that are in the contract, that are in your solicitation and your contract, are correct. And Jacob made a really good point about the new types of solicitations that are coming out that are all points driven. So I'm sure some of you are seeing these. If you're seeing it, most of the GSA vehicles and these large GWACs that are coming out, they're much different than what we've seen before, because they're not just, here's the solicitation, here's your, write a tech proposal, here's your eval factors, go out and win. Some of these solicitations don't even have real tech proposals in them. It's literally just like, if you went back and looked at RS3, which is, it's a $1 billion vehicle. I wrote the proposal for that for my last company, so I remember RS3 really well. Your tech proposal was 8 pages for $1 billion proposal, right? That's pretty crazy, because it was all related to your past performance and then all these point systems that they now use. GSA is all point systems. So it's really important to look at your systems and, try to build out, like, how can you comply and how do you get yourself to those points, because that's really where it's all about. Compliance is, we all use the dirty term compliance, like it's like something that's not making you money. Like that compliance is just, it's just what you have to do. Well, now compliance is also the way you're going to get to win these big proposals and get on these vehicles. So if you don't have the systems, you can't check the boxes, you can't get enough points, you can't even apply for you can't be on these solicitations. It's a big deal for your company. So I'm trying to bring it back around to, where does the rubber meet the road? That's really where it is for us right now, because they have changed a lot of how things are being done. And now what used to be just a cost to you is not only it's a cost, it's your value add, it's your way to get to set your company apart from other companies and go after some of these bigger efforts and really put yourself in the driver's seat in the GovCon world. Next slide. Thank you. So really, so this is a sort of dirty term that everybody keeps using, the CMMC, and what is it and where are we going to go with it and what do I have to do? For those contractors that have been around a while, we already went through DFARS, cybersecurity rules. We put all that stuff in place if you did, but really, if you look back at the DFARS rules, there's no real teeth to it. There's nothing they can really do to you if, other than, kind of slap your hands and say, hey, you have to have this in place, compliance, so that they're trying to up the compliance game and they put in place, well, it's coming, right? So on the next level, talk about, when it's coming and how it's coming. But really what it is there's 5 different levels that are going to apply to all Department of Defense contractors for your cybersecurity maturity model certification, because we have to have some really great name for something that just means you have cybersecurity rules in place. And you have good documentation, you have good controls. And level 1 is, if you can't meet level 1, you really shouldn't be in business, because you don't know how to do anything when it comes to protecting your computer and protecting the people, or you're protecting some data, right? If you can't do that, then you have some real issues. But when you really, for most contractors, they're going to have to find their way up to level 3. And if you get yourself to level 3, you're in a good place. Well, level 3 isn't much different than what the DFARS rules already had in place. So everybody's really scared about a lot of this stuff, but it's not that bad. But the hard part here is that there's going to be we have to get audited, right? So Jacob was talking about, some of this, in particular, a SIPSR audit, right? Try to get yourself a SIPSR audit. You won't get one. You can be online for this. I have companies that I represent that have been in line for a SIPSR audit for 6 or 7 years. They've been denied every time, and they meet the requirements, they have everything, but they're good contractors, right? They're DCA good contractors, DCMA good contractors. So DCMA and DCA say, well, I don't need to go in there and do that. You're a responsible contractor. You do all your work. You do fine. I don't need to come check your systems out. Well, the problem for them is they want to go after these big vehicles and they can't get points because they can't get a SIPSR. So there's a whole lot going on in these things, but CMMC, they saw, the one thing they did see was, well, we're not going to be able to do all these audits. So we'll put out a requirement. We'll train people in how to do the audits. We'll certify them. Of course, everybody's still waiting to be certified and be trained. So now they're going to have these requirements come out and no auditors. So again, we're going to have the same problems all over again. So we go to the next slide, please. So I just tried to lay out in some timelines, sort of, this was original timelines of what was put together for CMMC when they were going to release. So this was all 2020, and obviously these deadlines some of this is starting to slip out. They did, to DoD's credit, and I would say that, you know, that they've been as tight to this timeline and done a lot to try to stay within it, as opposed to past requirements that we've all seen. You know, I think we just mentioned the limitation of subcontracting clause that's sort of been sitting out there unattended for, I don't know, Ryan probably knows better than I do, but it's probably years that since that's been like met up. Here CMMC, you know, they have been moving quickly to try to get this through, and you are to start to see RFIs, including CMMC as a requirement. So you have to start to figure out how you're going to comply, how are you going to get your systems up and running, and how you're going to meet this level 3 requirement. Level 5 is like I don't think NASA meets level 5 currently. So level 5 is pretty crazy. But level 3 and level 4 are probably where most companies are going to try to get to. And then, you know, how are they going to start rolling this out? Well, they have this whole timeline where they're talking about by FY24, you're going to have pretty much every contract that gets rolled out is going to have CMMC requirements in it. That's not that far off for us, right? For contractors and for us as consultants and lawyers to try to help our clients get somewhere. This is not stuff that that a company can wait. There is a lot to do in your own network to make sure that you're meeting the requirements and you have the proper controls in place to do this. So I do suggest, you know, earlier than later, even if you're not going to see an RFI, if those RFIs are going to, you know, the first ones are all going to be the major acquisitions. Now the problem is that you probably work on a lot of those programs, right? You may be a 3rd-tier subcontractor to Lockheed, and Lockheed is going to send down a request to know that you're CMMC certified, and you're going to look at it, and the first thing that most companies are looking at is, say, I don't even know what those 4 letters mean. What are you talking about? What do I have to do? Because they got these requests 2 years ago for DFARS certifications. Now they need CMMC. So it's a changing guard, but you need to really get involved ahead of this one, and, you know, get people involved now to help you figure out how you're going to get to the level of certification. And it's not the hardest thing in the world to do, but it is costly. But there are places like the PTACs and some of the you know, even I know that the MEPs actually, so if you're a manufacturing company, the MEPs actually have money that they can use to help you get certified for the manufacturing companies. So if you're a small manufacturing company, make sure you're reaching out to your MEP to see if they can help you to get the CMMC certification. I think we're ready for Ryan's question.
Yeah, sorry, I did that accidentally. Are you finished with your comments?
There anyway.
I'm sorry. Okay. Okay, Ryan, first question here is for you. Is it possible to violate the Procurement Integrity Act without knowing it?
Yes. Well, it depends on how you define knowing. I kind of touched on this in my my presentation, and but I think it's a very important point, and so I want to reiterate it, is that the requirement in the law is that the violation has to be knowing, but it all depends on what knowing means, right? So, you know, you can certainly violate the Procurement Integrity Act without having the intent to go out and violate it, right? Now, I was trying to think of a good example of where you might not be violating the Procurement Integrity Act. It'd be an open question. So let's say, for example, you know, a contracting officer emails you and accidentally or intentionally or for whatever reason sends you a competitor's pricing information, and it goes into your spam mail folder and you never see it. I think in that case you would not have violated the Procurement Integrity Act because you didn't know that you had that information. But if they send it to you and you know, you didn't ask for it, but you get it and you open the email and you're like, oh, what's this? And it's a competitor's pricing information, and you look at it and you say, oh, wow, that's really interesting. But then just don't do anything with it. Even if you don't even if you don't leverage that information to your advantage in your proposal, you've still violated the Procurement Integrity Act because you knowingly obtained competitors' pricing information. And so, there's a little bit of gray area there, and the case law is constantly evolving. But there's a recent case that came out late last year that kind of touched on some of these issues that I've just described. And the court went into a little bit more detail about what knowing means. But what they said is that the contractor has to know that the contractor received the information, right? So if it's in your spam folder, you didn't know you received it, you're probably safe. But if you do know you had the information and you look at it, you read that information and the competitor's proprietary information, then yeah, you've probably violated the Procurement Integrity Act in that case. Now, obviously, if you open the email and you see your competitor's pricing information and you're like, oh my gosh, what is this? And you immediately call your lawyer, and then you and your lawyer work together the plan. Okay, we're going to notify the government that this happened and it was accidental. And you might want to talk about the person who saw it, maybe walling that person off from work on the proposal. I mean, there's a lot of different ways that you can mitigate an accidental disclosure of pricing information. But in that case, you're probably going to be okay, right? You're definitely going to be okay, right? I mean, no one's going to get prosecuted for a situation like this where they inadvertently receive the information and they review it and then they take measures to mitigate that. But I think the bottom line here is that it's just important to be aware and be very careful anytime you get any procurement sensitive information. And this is something else I didn't mention in my presentation. We've been focusing on competitors' pricing information. It's also a Procurement Integrity Act violation if you get sensitive source selection information from the government, right? So if you see the government's sort of source selection plan in advance, that's an issue. And the point that needs to be made in response to this question is that it can't happen unknowingly, right? You have to know that you got the information, but it can certainly happen inadvertently. And I think that's the point that we have to get across here is be aware when you're working on a proposal, you're talking to the government, information's getting exchanged, be aware of the information that you get. And if you get information that you think might potentially be a violation, then contact your legal advisor and make sure you get that worked out. I think you're on mute there, Jennifer. Yeah.
Thank you. Okay, Rebecca, what is the recommendation when a contract labor category doesn't match what the Department of Labor FLSA requirements are? For example, contract says exempt, but we know it's a non-exempt role.
So I'm going to say that we have to, the DOL is going to trump. You need to make sure you're staying compliant with the DOL. But in your experience, how have you helped clients get through this? Or this is really a tough one. I mean, a really tough one, because we're talking about potentially contracts that, if you're a smaller business, especially, not making money. So how do you reconcile this?
Right. So we touched on this a little bit earlier about really trying to look at what the labor category or the scope of work is saying. And really the best thing to do is to go through, what they call the conformance process, which is basically laying out, here's what you're asking us to do. Here are the ways that it does not meet the exemption qualifications. So you need to have a good understanding of what those exemptions are, such as administrative, professional, and computer and what have you, and bring that back to your government contract folks and see if you can get them to agree on that. If it's really going to be an issue for you and you can't work around it, you can take it back to the Department of Wage and Hour and have them take a look at the conformance. That doesn't make you super popular with your contracting officers. So you really, if you can get your contracting officer to agree to that ahead of time, and if you don't want to shake that tree down, then plan on knowing that you're going to have to pay that OT. So you're protecting your own company and you're staying out of the out of the scope of DOL.
So do you think it's better to, I'm just going to ask, just to think about this, it's probably better to do this before you accept a contract, before you bid, than it is to do it after you're awarded a contract.
That is very true. And I have to say, I've had several of my clients that did not have 100% of what that scope of work was going to look like. And we get this information of what the total scope of work is going to look like. And it's very much different than what they bid on, or it has an element. We had one situation where the client had no idea that the workers' comp cost for this particular role, the scope of work, was going to be like 10 times what they expected. So they barely made it through that contract without losing money on it. So it can happen. So you just need to have, some contingencies if you can, and to really understand if that scope of work is what you're expecting on those labor cats.
Great. And before we go to the next question, just a reminder to the audience, if you have any questions for Rebecca, Jacob, Mark, or Ryan, please go ahead and just type them into the control panel, which should be on your right-hand side. And for me, I think it's the third one from the bottom where it says questions. But just go ahead and type those in. They're all anonymous. I'm not going to read off your name. We'll just read the question, and hopefully one or more of our panelists can answer the questions for you. So I do see that some are coming in, but we're going to go through these first, and then we'll start taking the audience questions shortly. So Jacob, this one is for you. Do I need an adequate approved accounting system before proposing on a cost reimbursable contract?
Yeah, no, absolutely. So I think I've already answered the question earlier, so I stole my thunder due to myself. But ultimately, before you go to a solicitation, right, this is one of the go or no-go criteria. And so I think Mark aligned a lot of these system criterias, and he actually worded it better than how I did by saying that we really are seeing that shift. And after hearing him say it back, there really is a shift, right? We're seeing more solicitations driving point values or criteria, and these aren't easy levers to turn on. A CPSI or a contracted purchasing system review is not something you can go procure and put into place within 20 days, or 30 days. The same with estimating systems. If you're starting from scratch, there's a lot of work that needs to go into attesting to it and defining it and having the right controls. So for small businesses, it's 100% required. And this is the biggest takeaway that I would have out of everything I'm saying is, I think for small businesses, the approved or adequate accounting system is a requirement that really is applicable to you for cost reimbursable type contracts if you're going to start pursuing work that way. Until you meet some of these massive thresholds of 50 million or 40 million or 25 million for the other systems, the accounting system's probably the one near and dearest to my heart, because really you can put the controls in place ahead of time, and you need to have an evaluation to submit with your proposal. Meaning you cannot call DCA to come get them to audit, as Mark also alluded to, is you have to use like an independent third-party CPA firm, and that's the language that you'll see in the CIOS P4 contract. So you need to have an accounting firm that knows how to implement these, or an expert that can actually implement the controls for the estimating system or the accounting system, and do that ahead of the time. Now, the flip side of that is that it's also going to be a requirement, because without an approved accounting system tracking your direct and indirect expenses, it's going to be hard for you to really formulate that price tag in an adequate proposal in compliance with Section L. So certainly there's a lot that goes into it. And so I encourage contractors, if you're seeing solicitations kind of going to a cost plus or cost reimbursable realm, get this sooner than later. And it's going to help you with your estimating and internal profitability and all those good things. So it's kind of a win-win in my view. Thank you, Jennifer.
Great, thank you. Okay, and Mark, over to you. I'm a small business owner. Does the business system rule apply to me?
Yeah, so we did kind of cover this one as well already, but I'll talk a little more on it, just because it's always I think, I tend to work more with small businesses and medium-sized businesses, so I see a lot more of, these kind of issues popping up. So the business systems rule technically probably won't apply in most instances, but like I said, you really have to check the solicitations that you're working under. And I think the point that we're trying to make here is just because it doesn't quote unquote apply doesn't mean it doesn't apply, right? Doesn't mean you shouldn't try to figure out how you're going to get to compliance and how you're going to get your systems in the proper order to meet the requirements, because as you grow and as you want to grow, you're going to need them, and you're going to get questioned by primes. What systems do you have in place? They don't want to, and if somebody else has them, I think Ryan said this really well, which was, that you could have a company that has the systems in place and they're going to be more favorable to Lockheed to work with. Lockheed doesn't want to take the risk of downstream, working with a downstream company that isn't prepared and doesn't have their systems in place. So it's to your advantage to start doing these things. Now, we're not saying that they don't cost money, because they do. And all this stuff, there is cost to all of it. But, finding the right experts that can help you and help guide you, a lot of this, these things are out here. It's not, you're not recreating the wheel to do these kind of things and get these systems in place. So, and there's always, experts around that can help you, and people that have been in the industry. That's, one of the reasons why I like doing these events, is because Jen puts together great panels of people, and she puts out more content than anybody in terms of how to get these things done and how to understand what you need to do.
Thank you for the kind words. And Ryan, back over to you. What are the penalties for violations of Executive Order 11246?
Yeah, so they can vary broadly depending on the nature of the violation, and more importantly, the contractor's response to the violation once it's been identified. If it's if it's cooperative with the government, if the contractor puts new systems in place to avoid a penalty again, if it's a sort of an inadvertent violation, then you're gonna have a lighter penalty. There have been cases though where you have no huge companies, but medium-sized companies of good size that should have had systems in place, and they were really doing nothing to comply with EO 11246, and so that led to a suspension and debarment. And really the point that I want to get across here in response to this question is just to reiterate how serious some of these issues can be. It is possible to be suspended or debarred and not be able to participate in government contracting anymore if you violate 11246. That's I guess the important point is to just pay attention.
Great, thank you. And Rebecca, over to you guys. How can the trend towards people analytics help government contractors?
So this is my favorite topic. So when I hear things like penalties, and it makes us all want to cry. And then when I think of HR and I hear things like people analytics, I get really excited, because to me, this is a big part of our future and can really, really help small, medium, and large companies redirect and substantiate what they believe that they need to be doing, and also help point out what they thought they should be doing, but they're not. I personally, and I'm going to ask you the same question, but recently got my master's in this subject and at UVA, and it was amazing the projects that I worked on at UVA and how much I knew the answer, and then analytics showed me I was either slightly off or very off. And so I do believe that with government contracting, the analytic piece to this can be really, really valuable. We're listening to all these systems that we're talking about, and if anyone can get this right, it should be our GovCon clients, because you already have phenomenal systems that, if used right, can pull a lot of data out and analyze correctly, can show you how to potentially not go down the wrong side of an EEO complaint, or not be doing something correctly as far as some of these mandates. So I believe that it can not only show you how to get compliant, but how to meet some of these mandates that are out there.
Mhm.
But it can also help you just culturally become a really great place to work. What are you seeing?
I have to agree with everything you just said, Rebecca. I think, and the other thing that, having maybe a system that does that, or having access to a system that does that, you're meeting some of those process and system things that need to be in place with some of your other certifications as well, because you can run so much reporting out of it. Certainly our more medium-sized companies are seeing a lot that we can data mine in there and be able to comply with some of that. And again, it shows you those surprises that you think this is working this way and your data is going not so fast. So it's a good opportunity to take a look at that.
Thank you. And Jacob, when should a small business owner strategically begin investing in adequate and approved accounting systems?
Yeah, so I think my question is ditto off of what Mark already aligned to, because really it is an investment, right? It's a strategic investment that, although a business system is not required, meaning CIOSP4 will give you more points if you have an estimating system in place. However, an estimating system is not required of you. You can go get an estimating system, have it approved, put the procedures in place, and then when you're working as either a prime contractor, where the contracting officer is going to rely upon that estimating system as a risk reduction. The same goes for if you're working with other, as a subcontractor and you're working with some of these larger primes. And so having these controls in place are going to mitigate the risk of you doing business with them. I've also seen just recently, right? So DCAA, if I do like a kind of a 30-second crash course, for back until, what was it, December 15th of, I'm aging myself now, I think it was 2017, they, or it may have been, 2017, Congress mandated that DCAA had to clear up all of their incurred cost mission backlogs. So meaning if you were a DoD contractor, they had to get all their ICSs cleaned up so they could do contract closeouts and all that good stuff. And so they have met that, and that's a sidebar for how they met that, because they ended up making a lot of businesses just low risk. And so they didn't audit them. They kind of, got the rubber stamp out and we're flying through things to get their backlog cleared up. And so they now are current. And what you're seeing is that DCAA, as of today, as in 2021, they are actually out there and they're reprioritizing their focus. So the ICSs are not like their priority like it was maybe 5 years ago. And so now these systems, a CPSR system that was compliant 5 years ago, you're actually seeing contractors get dinged for non-compliance. So it's really, this whole theory of being in compliance, you have to go back through and revise these things and edit them and keep current with either statutory changes that need to be in place or regulation changes such as CMMC. If you had a CPSR guidebook 5 years ago, CPSR or anything cybersecurity really wasn't in it. I mean, it just didn't exist. And so now it's like, how do you make sure you have the most current data in place? And so I think it is an investment. I think it's a wise investment. And certainly there are 6 business systems. I wouldn't say go get everyone. Some of these like estimating or purchasing or accounting are more applicable versus if you have a property management, or if you don't have any government property, then you don't need that system. It's kind of self-intuitive. But so certainly I think it's a great strategic alignment if you're going after proposals that offer points. It's going to save you in the long run. It's a good investment.
Great, thank you. And our next question, I believe, is Mark. I'm a small business owner. Do the CMMC rules apply to me? And how much different are they than the DFARS cybersecurity rules?
I think you're on mute, Mark.
There we go. That didn't work the first time. Sorry about that. So small businesses are always trying to figure out, well, can't we get away with? Don't we not have to comply with the same rules that Lockheed, DRS, and everybody else has? Unfortunately, on this one, the answer is yes, you do. The rules are pretty clear that they're going to apply across the board. There's there's some exceptions on providing COTS for like if you're a commercial off-the-shelf manufacturer, things along those lines. But for those of us in the GovCon world, these rules are going to apply. They're a good set of rules, honestly, for building out a cybersecurity practice for your company that makes sense. The amount of hacks that are, we all see across every kind of business and everywhere is, it's insane. And if you look in your log, most GovCons look at their logs on a daily basis, they are getting attacked, whether or not they have some, as long as they have somebody that can actually look in the logs, they'll all find out that, almost all of our email gets, somebody's trying to hijack it at all times. So the rules apply. They are not that much at level 3, which was based on, NIST 800-171. Level 3, there's only like, I think 4 or 5 other controls that are added above the 800-171 requirements. So if you had been, compliant or moving towards compliance on the DFARS cybersecurity rules, you had your, you had your SSP in place, you had a POAM you were putting together, you knew what you were doing to get there. Now you have to get there, right? That's the difference is your answer is no longer, well, I'm going to do these things. The answer is, okay, I did these things and I have them in place. So whatever you were planning, if you were planning to have your cyber guy come out and work on your network and, build your firewalls out and make sure everything was in compliance, you now have to do it. You can't just say, I'm going to take care of that. That's no longer good enough. So it's time to get everything in order and go out and spend the money that you need to spend to get that done.
Great, thank you guys for answering those. And again, for the audience, please go ahead and type your questions in. I will read them off in the order that they came in. And the first question reads, what are the rules for paying for a business lunch with a federal employee, contracting officer, etc.? I'm referring to a $25 to $30 range.
I can try to answer that one. I would say don't do it. It's pretty easy. These rules are a little bit in flux, and there's been some recent changes, but really the contracting officer would probably have to get clearance from ethics counsel. I mean, there are circumstances under which you can provide lunch at, say, for example, a conference, a widely attended conference that everybody's invited to. And if a contracting officer comes, then that's fine. But even then, the contracting officers are careful, and they usually have to get legal sign off from their agency first. But if you're going to take a contracting officer and sit down to lunch at the Palm or whatever, don't do it. Even if you could be under the threshold, it's going to create a bad appearance and just invite issues. So to the extent you're doing in-person marketing, I would say do that without involving anything of value.
I completely agree with everything Ryan just said. I'm actually the president of TASC, the Tidewater Association of Service Contractors, which is a nonprofit. And our whole goal is to help facilitate the acquisition process and increase communication between government and contractors. And so we host these big industry days. And, as the president, we always get that legal counsel question of like, who's buying the lunch? And, we have hundreds of people coming, and it's just the rubber chicken lunch that you are used to seeing at those industry days. But they have to, actually they buy their own lunch, and we cannot provide it to them. So yeah, I would strongly just disencourage folks from buying your CO anything.
Okay, thank you guys for answering that. Again, if the audience, if you have any questions related to any compliance issues that were covered here, please go ahead and type them in. Otherwise, we'll do kind of a lightning round if there's any other parts of compliance that just due to time constraints that you didn't cover that you wanted to mention, or any best practices or pitfalls. Rebecca, we'll start with you guys if there's anything you guys wanted to share that you felt that you didn't have time to cover today.
I'm off mute. Here we go.
So well, from my aspect, that could be a loaded question.
Yeah, I was going to say, wow, you just gave us the open mic on HR.
Right? Yeah, I think maybe the takeaway for you all is if you don't have an HR resource on staff, make sure at least your legal counsel is familiar with how your employees are playing into this, or find a resource to be able to support you in that area, just because there is so much that your employees do, and keeping time and attendance and all of those sort of things plays into all of the other systems. So, yeah. That would probably be
Great. And Mark, over to you.
I think, you know, if I had to give sort of a wrap up, it's really, you know, having an ethical company that is compliant is, you know, it really is, you know, the stalwart of being a government contractor. And I think Ryan hit a whole lot of points that were really important on procurement integrity and these things. And, you know, I think it only came out once, but the reality is, you know, a lot of these things that, you know, you can build out, if you build out your systems and you're being responsible and you're being ethical, you're if something goes wrong, you have a defense, and you can show that you're a good contractor and it was a mistake and something happened, and you can keep doing business. And if you don't have those systems in place and you don't have that stuff, you know, it could be the end of your company, right? You could be suspended or debarred. And for most small businesses, suspension is the same thing as debarment, right? You're because that suspension is going to kill your business. So, you know, this is important stuff, and it is critical to have the right people around you to help you build out systems and processes. But, you know, in the end, it really is a lot about reasonableness and being just being a good contractor.
Great, thank you. And Ryan, over to you.
Yeah, sure. Happy to be on and share with everybody today, and you know, feel free to reach out with any further questions. The last thing that I will say, and you know, the way Mark kind of wound things up, you know, it was almost a mic drop there. Hard to follow that, but and not to open up a whole other can of worms, but one thing, there's one term that I don't think has been said yet today is the False Claims Act, which, you know, we had, you know, on and that's okay, but that is just another thing to be aware of is the False Claims Act gives it has something called a key tam action. It allows a whistleblower to if a whistleblower sees wrongdoing within the company, allows the whistleblower to file a lawsuit on behalf of the United States government and potentially receive a lot of damages. And the reason I talk about that is not to make you suspicious of your employees, so that you're going around and looking like, oh, who's going to be the whistleblower here that's going to sue me. That's not the point. But the point of talking about the False Claims Act is to understand that that any or almost any of the things that we are talking about here can potentially turn into a False Claims Act issue. So if, you know, I don't want to oversimplify too much, but the basic gist is that if you submit an invoice to the government and you're not in compliance with some rule that's, you know, connected to that invoice, you potentially have False Claims Act liability. So, I mean, I don't want you to think that there's a, you know, False Claims Act around every corner, but it's there, and be aware of it. And the point is it a violation of a rule, of a small little rule that might not have many consequences due to the rule itself. If there are a lot of invoices that could, you know, that have a nexus with the violation of that rule, that's where the False Claims Act comes in. And, you know, at that point, you're looking at $11,000 per invoice plus treble damages, right? So whatever that invoice was, you know, if you submitted, you know, $500,000 worth of invoices to the government in a year or more, you know, you're potentially liable to the government for triple that, plus 11,000 per invoice. So the reason for going into all that is just to let folks know that there's this whole other regime, compliance regime that that is out there, which is the False Claims Act, and it's another thing that should motivate you to become compliant.
Great, excellent point. And Jacob, we'll wrap up here with you.
Absolutely. No, well, thanks for having me today, Jennifer. And I think Mark did the mic drop, and then Ryan just gave me like the lob shot to slam it in. So False Claims Act is great, right? And to kind of tee off of that, one of the things that I welcome real quick, because we do have a couple minutes, would really be the PPP loan. So, and the PPP loan and people seeking forgiveness, right? I just got off the phone before I hopped on this webinar. They want to seek forgiveness. They do cost plus contracts. However, DCAA has issued a memorandum that states, hey, it's a credit. If you go read FAR Part 31.201-5 credits, if you receive the forgiveness, then you owe it back to the government. Now, contractors, this is how you can figure out good clients or bad clients, I suppose. They go, well, what's the likelihood of them actually catching me? Well, that's a great question. And I think where, Ryan, I welcome your input on this is, where does that False Claims Act land? Because I think in my mindset, right, SBA is going to audit every PPP loan over $1 million. And so they're really going to attest to, did you need it? And then the flip side is if you saw forgiveness, making sure that you credited back via your incurred cost submission on your cost plus contracts or cost reimbursable contracts. I mean, what are your thoughts, Ryan? I don't know if you have anything you want to kind of shed light on there from a compliance standpoint.
Yeah. Well, I mean, I think, from a legal perspective, that's a very interesting question, and not to get, too deep into the legal nuances, right? To maintain a False Claims Act claim for the whistleblower to maintain it, you have to show that the wrongdoing by the contractor, whatever that is, was material to the government's decision to make a payment, and there's other elements. So it is a bit of a higher bar. I don't want people getting the idea that any little error might lead to the False Claims Act. But as to how exactly that might come into play with the PPP loans, it's an interesting question. I'd have to think about it a little bit more, but certainly, I would be concerned. I mean, if at any point a contractor knows that they have done something wrong, that they've not accounted for the credit, that they've basically tried to double dip. They know that they've done it, and they move forward with that, and send that off to the government for payment. Then yeah, that almost certainly potential for False Claims Act liability there.
Well, and I think where a lot of contractors are even getting hung up on is that fact of, you had to certify that you needed the loan. And then now, at the end of execution, I have many contractors. I actually personally, out of all the contractors I represent, see very, very little government contractors being impacted due to COVID, right? I mean, there are some where they couldn't go to the facilities. But then they kind of filed everything under the 3610 and recovered the cost that way. But the flip side is you certify that you need it, and then now you're kind of playing like Monday night quarterback, and you're saying, hey guys, your revenue kind of stayed the same like throughout all of COVID. Did you really need it? And that's where, is it going to be a false claims? I'm anxious. I know there is no exact answer that you can provide us because everyone's kind of, it's ongoing. But my big thing too, just to kind of close out with compliance in total is there are so many things that are, required, and really this panel discussion has done a great job, everything from HR to the legal and then systems and CMMC, cybersecurity. And so my recommendations specifically from the accounting side is making sure that all of these elements of cost that you guys are either incurring and tracking, there are requirements out there and you need to be mindful of them. Most contractors that I come across that didn't know executive compensation was a thing, and that DCA has a whole group and team that evaluates the president of an entity's compensation. And it's not just the $528,000 statutory limit that is published out there. There's a whole level of scrutiny that goes into that. And we've seen court cases kind of defining what is a reasonable level of compensation in compliance with FAR Part 31.205-6. And so you have all of these elements. And if you're doing, I think the biggest thing from compliance and accounting is understanding your contract type, understanding the risk associated with that contract type. I mean, if you're just doing firm fixed price contracting, executive compensation is not a thing, credits for a PPP loan, it's not a thing. And so you have to be able to silo that. And as any business grows, you're opening more doors, right? So if you are growing into a cost plus contract, what everyone's dream is, you have to understand you're subject to FAR Part 31, right? And what does that entail? And so that's where reaching out, become knowledgeable. PTACs are great resources. And like I said, I appreciate your time. Hopefully you got a couple little nuggets of information and I appreciate everyone's insight.
Great. I learned a lot from all of you guys. I appreciate the great content and the answering the questions and just the time that you took to put everything here together. So thanks to the audience for joining us. Again, the PowerPoint is already up on slideshare.net. Mark, I was going to ask you real quick if this is a correct email address for you. If not, we can edit that to the
Yeah, if we could edit it, it would help.
Okay,
Yep.
great.
Thank you.
Well, thanks everybody. It's great to see you, Rebecca, Jacob, Mark, and Ryan. Thanks for participating and contributing, and enjoy the weekend, everybody. Happy Friday the 13th.
Bye. Thank you.
Everyone.
Bye-bye. Thank you.
Take care.
Okay, thanks.